Welcome to our weekly Forex forecast, and today we are preparing for the week of June 8th to the 12th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your trading. All right, so we will start off as usual with our calendar here. So in terms of overall, first let's take a look at overall market conditions. So what's going on right now? We are very much in a very risk on, very much optimism in the market. So our stock markets, as we have seen, have been going up. And actually, Nasdaq broke through the resistance and it's at all-time highs, which is interesting because our economies are just opening up and employment is at all-time lows, but the market is very exuberant about just the opening up of the economies and the coronavirus being handled, at least being managed properly at this point, and potential vaccines being developed. So as a result of all of that, we have seen the stock markets go up. And one thing that is a little worrying right now are all the protests that have been going on in the US. So we generally don't see a lot of curfews in the US, but because of the protests, there have been a lot of the protests are peaceful. However, there is that element where we have had some violence, some riots and stuff, and as a result of that, curfews have been placed on different cities, and the the protests are still continuing. And that would be a concern, generally would be a concern for the market. Right now, the markets don't care. And we also have a protest in Hong Kong as well. And again, the markets have been disregarding all these protests or things that are going on in the different countries here. So right now, a lot of positivity in the markets. What we have to think about is at some point that can turn. So just watch out for that, especially as we get closer to the top. So with Nasdaq, we have already reached the top. Now with other stock markets, we haven't quite reached the top yet. I'm talking about pre-COVID. 19 top, and as we get towards that, there's bound to be sellers coming into the market, so we have to watch out for a turnaround there. Okay, so in terms of the news that's coming up, first on Sunday, today, we do have some numbers here from Japan. So there's final GDP numbers at this point. They are supposed to be, they're supposed to be slightly in the negative territory. So if they come in better than expected, that will be good for Nikkei. But if they come in below expectations, that would be bad for Japanese yen. Japanese yen, being a safe haven, has been negatively impacted by all the optimism in the market, and as has the US dollar. So next, we have ECB president speaking here. ECB, everything that we have seen come out of ECB has been positive lately because the stimulus package that they are putting together, or that they put together, was much larger than what the market was expecting. And that's a positive thing because that helped Europe recover from these previous few months. So anything in that regard will be considered positive, and that will be good for the euro as well as the stock market here. And then we have business confidence numbers here from Australia as well as New Zealand. So both of these currencies, Australian dollar and New Zealand dollar, have been the beneficiaries of the positive stock markets. So generally, when the stock markets are going up, we also see Australian dollar and New Zealand dollar go up, which we have seen in the recent months. So any positive numbers here are likely to push these currencies up further. And then Tuesday here, a whole bunch of data. And in this case, we have trade balance numbers out of the Eurozone, We have wholesale inventories here as well. Again, if the numbers are better, that means the inventories are decreasing. That's a positive sign, again, for the stock market. But as we get, like I say, as we get further and further up in the stock market, the chance of the stock market turning becomes higher. So just keep that in mind, because we can't have the economy not doing well and the stock market going up. It doesn't make sense. So at some point, that gap has to close, and this is when we may see the stock markets turn. So just watch out for that. Right now, it is still in risk on mode. All right, Wednesday is a big day. We do have FOMC. Prior to that, we have CPI, which is our inflation numbers for US here. So this is the monthly numbers. At this point, it's supposed to be better than the previous. And if it is, that will be, again, good for the stock market. It may not be. The positive numbers out of the US are not likely to be good for the US dollar. They are going to contribute to the stock market moving up, which means US dollar being a safe haven currency right now is likely to drop. So this is now it's starting to go in the opposite direction. Now, we also have FOMC here, FOMC statement, and Fed is not expected to cut rates at this point. However, if by any chance they are a little bit more open to negative interest rates, that is going to drop the US dollar, and it's going to push the stock market higher. So one of the reasons stock market is doing so well is because all these central banks are pumping money into the stock market. They are buying securities, they're buying corporate bonds, and generally they don't buy corporate bonds, but now they're starting to buy corporate bonds as well. So overall, there is a lot of positive inflow of money, and as a result of that, it has been going higher and higher, and that's one of the reasons, or one of the things that's driving the market. So if we see that the Fed starts to accept negative rates, that is going to light the US stock markets on fire. So that will be a positive thing. For the US dollar, very negative. So we could see US dollar drop as a result. And again, FOMC conference is where they get to ask questions. And this is where we could see some of those comments come out. I would not expect them to come out in the statement at this point. But if in the press conference, if there's any comment in regard to accepting negative interest rates, that will be considered positive for the stock markets. So far, Fed has been saying no to negative interest rates, but should that change, it is going to be positive for the stock market. And then we also have Eurogroup meetings here on Thursday. Anytime we have leaders meeting, we tend to get journalists there, and as a result of that, there are comments that are, that people are asked questions, and as a result, we can get a lot of comments out of that can move the market. So we just need to keep an eye on our news feed on Thursday here in case they make any comments like that. And then on Friday here, GDP numbers out of UK. They're supposed to be worse off, but I think any positive, like if it's not as bad as what is expected here, that is going to be a good thing for the stock markets again. And on Friday as well, we have consumer sentiment numbers, preliminary consumer sentiment numbers out of the US. It is expected to go up because with the economies opening up here, US economy opening up and more people going back to work, the consumer sentiment is likely to improve. If the numbers come in higher, again, that will be good for the stock market. We saw that the jobs numbers last week here on Friday, the jobs number came in better, way better than expected. And as a result of that, it took Nasdaq through the highs. So any positive numbers that are coming right now are directly impacting the stock markets. And US dollar is taking a hit as the stock market goes higher. There's money going out of the US dollar into purchasing of the stocks. And as a result, safe haven currencies like Japanese yen and US dollar are not doing too well. All right, so let's go on to our charts. We'll start with our euro actually. So in terms of our weekly chart here, we can see a big move up here in euro. And if we look back here, this was, again, there was a big move to the upside here and it continued higher. So at this point, we could see a further move to the upside. So bias here is bullish. If the stock market turns and we go into risk off mode, I will look for all the US dollars crosses to reverse. But for now, it is looking bullish. And as it continues higher, we are going to look for these crosses to move higher as well. So bias is bullish at this point. And in terms of the targets here, I will look for 1.1400 and 1.1450, or this one could even go higher all the way into 1.1500. So bias here is bullish for euro dollar. Pound dollar here, this one as well. Very, very bullish move here for British pound. It is into the next support and resistance level, so we do have to watch out for that. Now, Bank of England has talked about negative interest rates, and if you hear any more commentary around that, then that could be negative for British pound. But also any kind of news around Brexit will play a role here as well. So if we hear news in terms of the negotiations proceeding well, that will be positive for British pound. But if we hear comments like EU, Eurogroup leaders not being able to come to agreement with UK on any type of subject, fisheries, any immigration, anything else like that, that will be negative for British pound. So British pound is something that we have to keep an eye on because it can turn. It can turn fairly quickly just based on the Brexit here. And if UK wants an extension in regards to when Brexit actually happens, they need to then have or apply for that extension before the end of June. So they have till end of June to apply for that extension. And during that time, we are likely to hear more comments in regards to Brexit and how the negotiations are going. So we have to be aware of that and we have to keep that in mind. So based on currently what's going on in the market, bias is bullish here, but just be cautious because of the Brexit negotiations. And also because, as we can see here, prices into resistance. This is a strong support resistance level where a market has reacted multiple times. So we could get something like this. So just be careful. But as we can see, this big drop here is getting filled now. So with the bias being bullish, we're likely to see a further move to the upside here. So bullish bias in terms of the targets here, we're looking at 1.2960. It could go all the way into 1.32, but I think that may take some time. So right now, I would be looking for potentially a bit of a drop here and then a further move to the upside. And like I said, target 1.2950 will be the first one. And then after that, we have a 1.3080. So bullish bias here for pound dollar as well. Aussie dollar here over the last 3 days, this one has struggled because it is into the highs here. As we can see, this is a very, very strong support resistance level here coming all the way from back here. This is where price was stuck forever before it finally gave way and dropped. And now this entire move, it has been filled. We are basically back into November 2019 levels. This was pre-COVID-19, pre-everything. So markets are, as we can see, they're really optimistic right now, and they have ignored all the negative impacts of the coronavirus here. So with that will be the caution, because it's into major resistance, we could see a turn. And as we can see, as we saw on the daily chart, it was struggling with that resistance. Now, that's not to say that it won't break through. We did see Nasdaq break through all-time highs. So this one can do that. This is not all-time highs. It's just an important resistance level. So we just have to be careful in terms of the move. Let's take a look at next levels here. So once it gets through the resistance. So again, it's very important to see that it actually gets through prior to us jumping long here. So first target at this point would be 0.7065 level, and then we're looking at 0.7150, and then above that 0.7200. So bias here is bullish as well, and we will look for something like that. Again, the caution will come around this 0.7050 level here. If it doesn't break through, we're looking for a turnaround. But for now, bullish bias here. New Zealand dollar here, this one has broken through those resistance levels, and if you take a look back here, it's into the levels from January of this year, so pre-COVID, so before all of these concerns here. And next target is bullish as well. Bias is very, very bullish right now. In terms of the targets, first target is 0.6600, and then we could see it go all the way into 0.6720. So bias here for New Zealand dollar is also bullish, and we may see price go higher here. Dollar CAD here, quite a drop in terms of dollar CAD. As we can see, this entire move up has been filled now. So bias is bearish at this point. We may get a pullback into 1.3550 level, but solidly biased to the downside. Next target here would be 1.3240, and then 1.3120. So bearish bias here for dollar CAD as well. I will look for a bit of a pullback and then a continuation to the downside here. And then Euro Pound here, Euro Pound has been a little range bound here over the last little bit here, over the last 3-4 weeks. It's just been stuck in this range. At this point, this one is looking bearish on the weekly basis. We have a bearish engulfing candle. The problem or the concern here would be the support resistance level. Price is right into the support. This was resistance previously, and now it's acting as support. So in this case, if price is not able to break through, we may see it go back into this range. So that's something to be mindful of, especially if the Brexit negotiations don't go quite as well. This is likely to turn around, because in that case, euro is likely to be stronger than British pound. So euro pound will turn under those circumstances. So keeping that in mind, for now, the bias is bearish. Only if it breaks through this level, then I will look for a continuation to the downside back into the base of this candle here. And in this case, our target is 0.8720 as the second target. The first target here is 0.8800. So bias here is bearish for euro pound. Swiss franc here, Euro Swiss franc has gone through the roof here. Again, this has to do with the stock market. With the stock market going up so much, all the safe haven currencies have gone in the opposite direction. Swiss franc is a safe haven currency. Before, we did see Euro Swiss franc drop because Swiss franc was getting stronger. Now, Swiss franc is weak, and we have seen everything go up against the Swiss franc. So euro has had a huge move up here. Bias is still bullish. Next target here is 1.1040, but we may get a pullback potentially into this 1.0780 level, so watch out for that. But overall, for now, bias is bullish. Again, this one as well is into resistance right here. This is where price has struggled on the way up before it finally broke through, and then it did struggle on the way down and then retested the same level before it continued lower. So we could get some struggle here. So just keep in mind 1.0920 level. So if it doesn't go through, then it could turn. For now though, bias is bullish. With caution though, target 1.1040. Pound Swiss franc, again, this one has gone up as well with Swiss franc weakening, and it has broken out of this range that price had been trading in for the longest time. So this was the range. It went up and down here, but it has finally closed on the other side of it. So this is looking quite bullish here. And next target is 1.2400. And if it continues higher, even 1.2540. But here again, a bias is bullish. The only concern with everything here will be the stock market. So should it go into the risk off mode, which is the opposite of what it's doing now, we're likely to see reversals in pretty much everything we have talked about so far. So that's the only thing to bear in mind. Right now, though, looking bullish for pound Swiss franc. Even dollar Swiss franc has actually gone up here. As we can see, price came into the support level all the way from here, and then it has pushed higher. So at this point, this one is more neutral to a little bullish here, not extremely bullish because US dollar is weak in itself, and Swiss franc being weak, they are pretty much neutral. It neutralizes both of them. So in this case, I would look for a move higher towards 0.9650. And if it doesn't go through, of course, we are likely to see a drop because this is an important support resistance level. As we can see, prices reacted here, and we have pins here on the other side. Now, so that will be the concern. And once it gets through that, we're looking at 0.9750. So neutral to bullish bias here for dollar Swiss franc. Yen crosses here. Pound yen has been extremely bullish. As we can see, it has gone through this resistance. This was an important support resistance level, but it has blown through it now. So bias still remains bullish. So this is the range where it was stuck forever for a couple of months here before it actually went through. So it's back into that level here. Once it closes into that area, then we're looking for a move higher. Right now, though, I would watch out for a bit of a pullback here before a continuation higher. And then we are back into that area essentially. So target here is 141.00. So bullish bias for pound yen as well. Euro yen here, this one did okay. It did have a huge move. Euro had a huge move to the upside here. As we can see, it's just been a one-sided move. On the daily here, though, we have a bearish candle. On the weekly, though, this is looking extremely bullish. Now, just keep in mind, it is coming into some resistance levels. This is where price is currently, and this is where it has struggled previously. Now, it is looking bullish. So bias is bullish here. Watch out for pullback into 122.80. And then I will look for a continuation. Next target is 125.80 and then 126.80 here. So bullish bias here for Euro yen as well. And we could see, should the market continue in the same direction, the stock market, we could see this reach the previous highs here from even February of 2019. So this is looking very, very bullish. Dollar yen here, this one has gone up as well. And as we can see, a huge move higher at this point. Look for a bit of a pullback, potentially into 109. And next target here is 110.65. And then we could see it go all the way into 111.50. So I would look for a bit of a pullback and then move higher. Now keep in mind, this is also into resistance. As we can see, price struggled here, reacted here, struggled here again. So this is an important support resistance level where it's at currently, which is 109.80. So we need the price to get through that level for it to continue. But for now, looking bullish, 110.65 is the first target and 111.50 is the next target here. Aussie yen here. Aussie yen is back into the highs from 2019 and looking quite bullish. As we can see, this is a strong resistance area. This is where price has not been able to break to the upside here. But now we have a very, very strong candle close here for the week. So this is looking bullish as well. And should stock market continue as it is, I will look for a further move higher. First target is 78. And then we have 79.20. So bullish bias here as well. Okay, so New Zealand yen, again, this is looking very bullish. We are again into a resistance here. This is where price has struggled previously. And once we see it go through, next target would be 73.20. And then, of course, that's a massive level of resistance. This is where we could see things turn around. For now, though, it is looking bullish, and we may get something like that. So bullish bias here for New Zealand yen as well. CAD yen, extremely bullish here. Oops. As we can see, it has gone back into this level where it had pulled back before it dropped. It is into resistance. This is a level where prices reacted several times before. So we just have to be careful. We have to make sure price goes through before chasing it higher. But it is looking bullish at this point. And this is the move that I'm expecting. So bullish bias here. 82.80 and then 83.50 are the two levels to the upside here. So all the yen crosses looking bullish at this point. Silver here, let's look at commodities, starting with silver. On the weekly here, this is looking bearish. We see price went into the resistance level and now it has dropped from there. So bias here is bearish. It is into support level. So watch out for that. We do need to see a break for this one to continue lower, but it is looking bearish. So first target would be 17.20 and then 16.80. So bearish bias here for silver. Gold here, gold has been dropping here as well, and it's again back into acting like a safe haven. All the safe havens have dropped in value this week here. So gold is into that, back into that category again. It was starting to act like like we see risk assets, which is your stocks, but now it's back with the yen crosses and all of that, which tend to drop when the market is very optimistic. So in this case, watch out for pullback into 1700 level, and as long as it holds below that, I'm looking for it to drop further again. First target 1670 and then 1645 and then 1607 here. So bearish bias here for gold. Oil has been going back up. So with the different economies opening up and the OPEC countries are still holding on to the production cuts, so they haven't announced any reduction in terms of the cuts. So for now, this is looking quite bullish. And especially with the economies opening up, there's more demand for oil, as oil is needed for all kinds of different factories and stuff like that. So this is looking bullish. Next target is 41.50. And above that, we're looking at 44.50. So bias here is bullish again for oil here. So now, keep in mind, once it gets here, this is an important support resistance level. As we can see, this was the turning point previously. So we will keep that in mind. But for now, bias is bullish here. Copper here, copper is looking quite bullish as well. As we can see on the weekly, it's into this previous support resistance level. This is a very important level. Watch out for full pullback, first of all, 2.47 level, or even a little bit lower here into 2.46. And then I will look for a further move higher into 2.5859 area. So bullish bias here for copper as well. And as copper goes up, we're likely to see Australian dollar go up as well. Bitcoin, I don't have the weekend numbers, but looking at the weekly here, we see that it's struggling into the highs here. So it hasn't been able to go through the highs. It's a bit of a neutral move here. We could see a drop back into the bottom of the range, but it's been trading in this range here for the last several weeks here. So we may see a continuation of that trading in this range. And of course, once the market opens up, we will get the daily. So we'll cover that in our daily analysis. For now, I would say neutral here for Bitcoin. S&P 500 looking very, very bullish. As we can see, price is back into this resistance level. We are very, very close to the all-time highs before the market just dropped here. Like I said, as it gets closer to those highs, the chances of it turning become higher. So that's something we definitely have to keep in mind. So here, bias is still bullish. 3260 is the first target. And then we're looking at 3,300. So bias here is bullish for S&P 500. So that's the move that I would watch out for. Nasdaq here, it has gone through the highs. These are the all-time highs. I did not think price would go through, but the jobs report, the non-farm payroll report, was actually positive. They were looking for job cuts. They were looking for a decrease in job cuts, but what we saw was actually an increase in employment numbers with a lot of people are starting to go back to work. There was actually the numbers reversed because people who were previously not working due to COVID were actually starting to go back to work. So markets took that as a very, very positive news, and we have seen it go through the high now. And this is where we were when things were really well. They were actually doing well in terms of jobs and economy. But now we are into this area that seems unrealistic, because how can a company be worth more when the economy is actually not doing that well? So how could the companies be doing well when the economy is not? But Nasdaq tends to have, or of course, Nasdaq has a lot of tech companies in it, and tech companies have done well during COVID-19. We have seen, for example, Amazon has done extremely well. We have seen companies like Zoom, they have done well. Microsoft has done well. Facebook has done well. Google has done well. So all these big companies that are in the Nasdaq here, they are driving the market higher. So bias is still bullish here at this point. I would just say, just be cautious. Next target here would be 9,900. And then above that, 10,000. So looking quite bullish. But again, as we get into these sort of, astronomical numbers, we just have to start kind of thinking that it's not realistic. When things are not realistic, when there's a bubble, that tends to burst. So we just have to wait. But as I can say, as we have seen in the past, and even here, market can be irrational for a long period of time. So we just have to protect ourselves, and we'll just go with what the market is dictating here. Okay, Dow Jones here, looking very bullish. Again, this is where price had pulled back to before it dropped. Now we are back into that area and into strong resistance, but it is looking bullish. So next target here is 22,750 and then 28,230. So bullish bias here again. And we will look for another leg higher. DAX here, this one is looking bullish as well. Again, we are into this previous support resistance level. So this is an important place where it's at, but it is bullish. So next target here will be 13,300. So bullish bias here for DAX as well. And we may see something like this. So keep an eye out for that. FTSE also looking bullish. FTSE has not been quite as strong as some of the other ones because of the whole Brexit and everything else that we have to be concerned about. But nonetheless, still bullish. And in terms of the targets, we're looking at 6650 and then 6800. So bullish bias for FTSE as well. And of course, Nikkei here. Nikkei's been very bullish, almost into all-time highs here. At this point, we may get a pullback into 22,800 and then looking for another leg higher, 23,800 and then 24,000. So this is looking bullish as well. All right, so that's all I have. Any questions before we wrap this up? Please put them in the chat and I'd be happy to answer. Okay, so no questions. All right, so you guys have a wonderful trading week and enjoy the rest of the weekend. I'll be back again with the daily analysis tomorrow. Bye for now.